Hi everyone, it's JR with Secure Metals. Today's Tuesday, April 22nd, 2014. It is 12:04 p.m. Eastern Standard Time, and I have some quick precious metals analysis here for you, and I'll get right to it. This is the daily chart here for gold. Gold had a really nice rally here from the December low all the way to the March high, March 14th high, at around 1390, currently testing the 50% fib level. Actually, your 100-day moving average here at around 1278, and your next target would most likely be 1261. So we had a few positive things here on the metals, and I mean long term here. Obviously, we have this formation here. This is a double bottom. Double bottoms are very bullish. And at this point, we did have, again, the double bottom rallied up fairly quickly. And now it looks like we are taking a breather. Very important key support line here at around 1260, which coincides with the 61% fib level. So if you're looking at this chart, you see here that we traded sideways here for roughly 2 years. Broke down through that barrier, and this seemed to be your support line. You had to move down to the bottom. You had to move down to around 1279 was your low. 1280 was actually your low. False breakdown, market moved immediately higher. We had a false head and shoulders formation where you have your shoulder here, head here, shoulder, and the other shoulder here. Once this breaks out, once you have a breakout in this shoulder, then you have a target of roughly around 1050, I think is the target that I gave, or roughly around that. But again, it turned out to be a false breakdown. You actually ended up having a double bottom, testing the previous low here from back in June of 2013. And you had a very nice spike up to the top, so another false breakdown. Now, this level here, 1260, served as resistance back here, back in 2010, and when we finally broke through it, it was a huge rally. And again, we are testing this level here now. Again, remember, keep in mind that resistance, once it breaks, it now becomes support, and vice versa. So this resistance back here is now going to act as support, and you saw the market form this head and shoulders right above this 1260 range, and now it is retesting this 1260 range, and or it hasn't tested yet, but it looks like that's where we're testing if this 100-day moving average holds. Now currently above the 100-day moving average, which is fairly positive. And again, you can see that in this fall here we had all three major moving averages above us, and that's really what we want to clear. We want to make sure that these moving averages are below us, that way they can support us going up and not down. So we've broken, we did a nice break here where we went above all those moving average, and now we are below all of them except your 100-day moving average. I've put this 200-day moving average here, which I normally don't use, but you'll see why in a sec. Okay, this is the blue line is your 50-day moving average. Yeah, green line is 100 and the red line is 20. You can clearly see that the 200-day moving average is a very slow moving line, and it really does a good job at dictating where the market is currently going. So obviously 200-day moving average moving up, then obviously the market is moving up, and now it's moving down, then now you can easily see that the market is also moving down with it. Now the great thing about this 200-day moving average is that it's now pointing sideways, which is very neutral, and it really seems like we have found a range here. It looks like this is the range that we're trading. We're trading between, I would probably say this level here between the 1190 range and the 1360 range. You can argue that the range is a bit higher, roughly around 1420, and that might be the case. And if this double bottom does come together, then really that's what we're targeting. We're targeting around the 1420 range. So Again, stochastics are moving, still moving south, so a little bit of room to continue to go down further. But I would like us to test this $260 range here, or 1260 range here, I'm sorry. And if this holds, it could be the, again, start of a nice rally. But again, we didn't really want the prices to go down this far anyway. But we are still above the 61% fib level and still above the 100-day moving average. And the reason why I put this 200-day moving average is because it's very positive. Anytime it's positive or negative, anytime the 50-day, which is this blue line, crosses this 200-day moving average. So again, the 50-day moving average crossing the 200-day moving average is a very, very positive thing or a negative thing when they cross. So you had here back in February of 2013, the 50-day moving average crossing. It crossed to the downside. Obviously, that was bearish, and you see the effects of that cross. This is actually called the cross of death. Anytime the 50-day passes the 200-day moving average. And now you've had that positive cross now here on this end, where the 50-day moving average is now above the 200-day moving average. That is a very positive cross. Couple that with your double bottom. I think right here we're looking to find a bottom, or I'm hoping to find a bottom, and hopefully continue to go higher and retest this 1420 zone. So that's your gold chart again. But as of right now, fairly neutral, above the 100-day, but still below the 20 and the 50-day moving average. Okay. On your weekly chart here, again, does look like we are starting to get a little bit oversold. Still testing the 20-day moving average. This is a weekly chart, so it could be very, very, very a slow moving chart here. Okay. But we'll see how this works out. See if this 1260 range holds. And let's look at silver here. Okay, so this is your silver weekly chart. Also getting a bit oversold here at this point. Like I mentioned on the last video, these Bollinger Bands are contracting, and anytime you have a contraction on the Bollinger Bands, you expect a breakout. So your breakout is going to come to the downside or is going to go to the upside. I favor the upside, obviously. Current fundamentals, you have to favor the upside. Positive cross, positive 50-day moving average cross on gold on the daily chart, meaning that moving average that I was talking about, the 50 and the 200-day. Again, you still have a lot of tensions in Ukraine, so we are expecting this to break out to the upside, but at this point only time will tell. On the silver chart though, silver is hitting the zone here. I've colored this green zone here. This green zone is really the zone where the buyers are coming. So you see, anytime we hit this zone, the buyers are coming. So if you still haven't gotten involved in silver, now would be a good time, especially if we come into this zone here. I think that's a great zone to buy in. Again, downside fairly limited. If you ask me, I would say $3 to $4 at best. Maybe $15 would probably be the worst case scenario here for silver before we can move higher. And that's if, obviously, we would break down, if we would fall below these important levels. But as of now, $18 seems to be $19, $18, 18 and a half. These seem to be the prices. Again, 1877, 1880, 1868. So the low 19s, high 18s seems to be where the buyers are coming. You would be really silly if you don't get in these metals here, especially at these levels, given the type of support that we have seen. Now, again, I've said it before, we don't want to continue to test these levels, because the more we test them, the more of a chance we have to break these levels. But overall on silver, especially on silver, this is really the line we want to come across. So every time we hit this line, we are pushed back down, and we'd like to see this. We'd like to see the expansion of these Bollinger Bands again. This purple zone is what I mean. the Bollinger Bands start to expand again, and we will be hopefully heading up in this direction. And if that's the case, we can overcome this long-term resistant line that we have, and hopefully once we come above that, then we have broken this downtrend, and hopefully continue to go higher from here. That's your weekly chart. Your daily chart, again, I just went over this as well. So again, really looking for these Bollinger Bands to start expanding again and lead the direction of this market here. Okay, that's your silver chart. That's your gold chart. I'll do a quick ratio chart. Last time I visited this ratio chart, I believe we were around 65, so we did find some support here, moved a bit higher, but this is a big zone here. Okay, so 67 is a big zone. I would say between 65 and 68, that's a big supply zone, where again, last time we saw these levels, we had a big move, we had an overwhelming supply versus demand, and of course the ratios fell. So we're looking for this to hold again and for the ratios to continue to fall, but currently the ratios are trending up. You can see higher lows and higher highs. We need again to break this trend, but we did test the 67 not too long ago, currently at 65, and once this trend breaks, we want this to retest this the 60 ratio here. Okay, so that's about it, guys. Not much. I'm gonna be doing another video. This is really just more on research, not gonna be any charts here. I'll do the Dow Jones here real quick. The Dow Jones still moving higher. Stochastics are a bit overbought. I'd be very careful. Again, you have a double top here where you had a move to the top, move down, another top here. Again, they're taking away the stimulus, so I just don't know how much legs these equity markets have. The weekly chart, a bit confused. Stochastics are in the middle, and again, retesting this resistant line here at around 16 and a half. And of course, your monthly chart, I'm still showing this yucky this yucky formation here. Not very nice. This is a broadening formation. I've shown many examples, but again, this is your monthly chart. It can take a tremendous amount of time, probably I would say a year to 2 to 3 years before this comes together. But again, I will stick with my prediction within the next 3 to 4 years, or 2 to 3 years, I would say, we are definitely going to see a move down to the bottom if this formation sticks. And another thing that you might want to keep in mind is that if you look at the Dow Jones, this is what you have to be very careful of, right? So you have your, after a year and 30 days, you have a 13% correction. After a year and after 10 months, you have a 19% correction. It's been about 5 months here, and you've only seen a 9% correction. And currently, we've been on a bull market here for a year and a half without seeing a significant correction. So I would really hesitate to stay in this market long term, and I would try to catch the quick moves as much as I could, or as much as I can, if I was playing this Dow Jones. But again, that's just my take on it. I think this thing is I think it's extremely overbought. Look out for that. And besides that, that's about it, guys. We'll see you next time. Thanks for joining. Bye-bye.